Now, the Policy Setting Committee of the Central Bank of Nigeria, the CBN, has raised the monetary policy rate MPR from 13% to 14% to tackle rising inflation. In June, Nigeria's inflation rate reached a 5-year high at 18.60%. The monetary policy rate, that's the MPR, is the baseline interest rate in an economy, and every other interest rate used within an economy is built on it. Addressing journalists today after the committee's meeting, Godwin Emefiele, governor of the Apex Bank, said the hike in interest rate will help address rising inflation.
The MPC voted as follows. 1. Increase MPR from 14% from 13%. Symmetric corridor at plus 100 and minus 700 basis points around the MPR. 3. Retain the CRR at 27.5%. And 4. Retain liquidity ratio at 30%.
All right, so we have an economist who's going to help us break it down in a way that we will all understand. He's a business analyst, Sam Chidoka, joining us from our Lagos studio. Thank you so much. Good to have you from Lagos there. Okay, first off, let me get your thoughts on this move by the MPC, moving the MPR from 13% to 14% and retaining other parameters, CRR 27%, liquidity ratio at 30%. Sound move by the MPC in your estimation?
Good afternoon and thanks for having me. The MPC had not so many options considering where we are today. So if you take it back a few months, in January, inflation was around 15.6%. As at June, we're at 18.6%. So inflation had been rising, inflation rate has been rising over time in the last few months. There was a recent increase by 150 basis points of MPR from 11.5 to 13%. And now, in reaction to inflation figures that we've seen for June, we've had another 100 bips increase. The MPC didn't have much of an option but to tighten and to increase the rate to try and stem the tide of inflation, because at the end of the day, inflation affects everyone. And it's the higher the inflation, the worse it gets for families and for individuals. And it reduces disposable income in the economy and makes it difficult for people to afford essential commodities. So yes, it was a good move to increase MPR from 13 to 14%.
I'm curious that you say it was a good move. You know what they say about, doing the same thing over and over again and expecting different results. The whole idea behind increasing interest rates in the first place from 11% to 13% was to check inflation. And government is saying, yes, we're going to continue to tighten as long as inflation continues to rise. What are the guarantees that we're going to get a different result with this latest 14% figure?
Well, unfortunately, we have so many headwinds. Remember that inflation is a lagging indicator. So when we're discussing the inflation rate for June, it's not a forward indicator. So it happens in the month, then we know what happened. So what the CBN is doing their best to curtail inflation going forward. I dare say that if we didn't have the last increase, we will be way above 18.6% right now. Remember that our neighbors, Ghana, already have inflation rate as much as 29 to 30% at the moment. And if you look around the world, whether you go to Europe or you go to America, you've seen spike in inflation. So with Nigeria, we have two issues. There is the homegrown issues around inflation, and then there is the worldwide issues relating to the Russia-Ukraine war, where you've had prices of commodities continue to soar, and that will put inflationary pressure on every economy. So the CBN has to react to this. The worst they can do is to do nothing. So increasing the rate by 150 basis points before was the right move. And I dare say that that's why we are at 18%, 18.6%, and maybe not 22%. Now they've taken another decision to increase by 100 basis points and see what happens again. Yes, you can argue that what that does is that increases is the base rate in the economy. So across the yield curve, you're going to see increase in rates. So banks will probably reprice their loans and increase cost of borrowing and all of that. But if you leave inflation unchecked, for an economy, will be worse off than a marginal increase in the base rates.
Do you think with this seeming reactionary moves by the MPC, by the central bank, if you like, that we will really get to a place where the inflation rate will go down as low as a single digits? What exactly are those more sustainable measures that need to be put in place? The CBN governor talked about the headwinds, the global headwinds and all of that. Of course, the Russia-Ukraine issue, supply chain disruptions, and what have you. What are the more permanent, sustainable measures that we need to take, whether in the short term, in the medium term, or even in the long term?
Unfortunately, some of the issues spiking inflation in Nigeria is beyond the MPC and the CBN. The MPC and the CBN, they have control over monetary policy, and so they will do their best within the bit of what they can control. So they will increase MPR, they will try and mop up liquidity in the system. They will try and support various industries like they've been doing, as the CBN governor mentioned, to ensure that the economy is productive and we are responding to the headwinds that we face. But however, so if you look at the inflation figures, whilst the CPI gives us 18.6, food inflation alone is over 20%. Now, one of the things that is causing food inflation is the fact that we have insecurity in the food basket of the nation. In as much as people can go to the farm and plant their crops and go and harvest, and able to get it from the farm gates to the market gates and sell in peace, you're going to have inflation, because then you have few goods, you're going to have demand less than supply. And so that will spike inflation. Now, security is beyond the CBN. The CBN can't tackle the issues around security that affects inflation in the economy. Then you deal with the issues around premium motor spirit fuel. There's fuel scarcity right now. That scarcity in itself means that people go to the black market to buy fuel, and then they will do transfer pricing. They would carry on that cost to offtake to people who buy their products. That's beyond the CBN. So there is so much the CBN can do. We have internal issues that are causing inflationary pressure, and there are external issues also causing inflationary pressure. All those things working together makes it that what the CBN does is to reduce the effect. Can we go to single digit? Not in the near future. Is it possible in a sustainable model going forward? Oh, yeah, sure. We've been there before and we can get there, but not with all the things that are happening around us: insecurity, soaring cost of commodities, the Russia-Ukraine and war. And then I see also in the economy, we don't have an economic team that has both sides of the economy tied together. So you have the fiscal side and the monetary policy. We don't see that. I don't see that cohesion between both sides in managing the economy as a whole. So there's so much the CBN can do.
What do you think is responsible for this lack of cohesion, in your own words, between the fiscal, policy and the monetary policy? A lot has been said about that lack of convergence. What really needs to happen, especially on the fiscal side, to meet, the monetary policy drivers halfway?
Well, I think it boils down to how the economy is being run and the decision of the handlers of the economy. In time past, we've had a coordinating minister of the economy who oversees every gamut of it. And we've had economic teams that included the people from the fiscal and the monetary side of the economy working together. And we've had special advisors at the presidency who are advising on the economy, and we've seen their impact. Maybe it's happening behind the scenes, But as a financial analyst and a watcher of the economy, I don't see it should be in our face. We have so many issues bedeviling the nation at the moment, and so every hand must be on deck to get things to work. There needs to be that convergence. We need to see a stronger reaction on the fiscal side and on the monetary policy. You can't be tightening on one side and it will seem as if on the other side there is business as usual. It can't work. It won't work. There has to be that handshake that makes it work.
Absolutely. And Nigeria continues to be, an import-dependent economy. The CBN governor did point that out. Now, let's talk about the oil issue. The aviation sector is tanking right now. I mean, the oldest airline in Nigeria is folding up if, care is not taken. Aero contractors. Let's talk about the refineries that continue to be moribund. 4 refineries remain unfixed. Can we even talk about having any kind of control over global oil prices as long as we export crude oil and import the finished petroleum products? Isn't that at the core of Nigeria's economic woes?
Well, it could be one of the many issues. And you'll be correct if you say that's at the core. We export crude, but we import refined products. I honestly don't like the conversation around the Nigerian refineries. My view has been for years that those refineries should have been sold. The federal government has proven not to be able to run the refineries, and there is no point beating around the bush. It's better for us that we sold those refineries for $1 than we spend 100 and something billion naira per annum running refineries that don't produce 1 liter of refined products. It just doesn't make economic sense to me. So I still stand on the position that those refineries should be privatized for whatever it is worth. Even if it's for 50 cents, it really doesn't matter. At the minimum, what it does is that it reduces the pressure on the expense that we make keeping those refineries alive. Meanwhile, they're not producing anything. On the other side, we've seen some modular refineries come on stream. Unfortunately, some of them that have come on stream don't have feedstock. And that begs the question. So you have a refinery, you don't have feedstock, and you're not producing anything. The Dangote refinery is still under construction. We hope that when it comes on stream, it would help to address some of the issues. But I dare say that the Dangote refinery is not a silver bullet that solves all the problems. All right. With particular mention to the aviation sector, as long as you operate in a sector where pricing is controlled, but the cost of inputs is not controlled, then you have a mismatch. It's either you have a free market or you have control on both sides. So an airline that buys aviation fuel at a particular price is forced to sell tickets at another price. If that price does not break even and make profit, they are not charitable organizations. Like Aero, many of them will stop flying. So something has got to give. It's either you make aviation fuel available to them at prices that work, so that the price that you have controlled in terms of ticket prices would all be in equilibrium, or you allow the airlines to price as they buy. So whatever their cost is, they have to cover the cost. It's business at the end of the day.
Absolutely. I was speaking with an aviation operator today, and he said, look, 70% of jet fuel was actually provided by artisanal refiners called illegal refiners. I wonder what your take is on, the argument that these so-called illegal refiners really should be licensed in a way that they can close the gap that this, fuel scarcity, jet fuel, and all of that continues to create. What are your thoughts on that? Should they be licensed? Should they be legalized?
Well, it's a difficult question, and to be honest, it's easy to say they should be legalized, but what you do is that you open a door that people would practice illegality and expect to be legalized at some point. That's the challenge with legalizing them, because as at today, they are illegal business, right? However, we have a challenge. I would suggest that maybe we grandfather that sector. You say, okay, we are going to make an exception for this sector at this point in time and form them into a cooperative, legalize them, provide them with feedstock. They already have access to how they refine the product. I don't know how they do it, but they seem to be able to do it. So maybe you form them into a cooperative and help them to do it better. The last time I was in Port Harcourt, the suit in Port Harcourt is dangerous. So there is health challenge from not doing anything about these illegal refineries. There is also the issue about illegality and bunkering and all sorts of things happening around the country. So I would say, if you're going to legalize them, maybe form them to a cooperative, legalize them, put the process in place that makes them entities that can operate with government, and then maybe they start paying some taxes. So it's a win-win situation for everybody. For the refiners, for the people that are doing the illegal business, then they can put their business on the table. For government, you make more money from taxation, then the product is available. But you form them into a cooperative so that you can control it. Because if you legalize one today, I bet you're going to have 20 spring up tomorrow.
Right, and let's talk about this historic event that happened today. The Nigeria's national oil company changing, well, nomenclature, as some would say. But what exactly do you think would change in terms of, let me just quote what Emefiele, the GCO, said, that, it won't be business as usual. The NNPC will now be a commercial venture instead of shouldering the responsibility of importation. It does not, does it mean that NNPC will no longer be importing? I mean, that's a question that I'm posing to you. And what do you think will change in terms of transparency and all of that with this new national oil company?
Well, so one is hopeful that NNPC will become like every other company that is registered at the CAC and not an operator and regulator as it was at some point, where you had some parts of the NNPC operating and some parts regulating, and all of them under the same GMD as it were. But now you have a company that is registered at CAC. I'm hopeful that they will take a step further and maybe privatize and not privatize, but maybe commercialize and then get listed on an exchange, become PLC, register with the SEC, register their securities on an exchange and allow Nigerians to invest and buy those securities. Then when you have shareholders who are Nigerians, the same way shareholder pressure groups make sure that other companies provide their annual reports, have AGMs, declare a dividend, people know what they are doing, the same thing will operate with the NNPC. So I'm hoping that this is just the beginning of a longer process that will continue and see us have a company that is truly Nigerian and public in such a way that you and I can buy the securities and become shareholders. And we expect NNPC to be transparent, because if NNPC is registered at the SEC and on an exchange, they will be forced to meet the rules and regulations of the SEC as regards public companies. Then they will be forced to provide their quarterly returns, quarterly accounts, have an AGM, have their semi-annual accounts, have their annual accounts before the month of March, just like every other company listed on an exchange. Then you will see transparency. So I'm hopeful that we'll take it further than what has happened so far.
We're hoping that too. But let me also again quote Emefiele. He says the companies, that's the new the national oil companies' fuel pricing policy, will be performed for a fee for the Nigerian government. What do you make of that?
Well, the devil is in the details. We'll have to see it happen. I'm hopeful that before now, NNPC had been the sole importer of refined products. Now that it's another company like any other company in that space, we'll see whether other companies will be allowed to import products, and the ability for them to charge a fee. As a company, they have the capacity and the ability to charge the federal government a fee for the services that they render. It will take time for us to see how these things work out. I always say that when it comes to planning, we don't have too many issues with planning in Nigeria. If you go back almost every government that has come in place in Nigeria, you have good plans, you have white papers, you have all manners of recommendations. Where we miss it is in implementation. I'm hopeful that the new NMPC will not miss it in implementation.
Yes, so we're hoping that too. Let's come back to the issue of this inflation rates at 18.6%. Before I let you go, let me quote what some experts have said. Sam, a good performance of economy in terms of price stability may be achieved by reducing the money supply and interest rate, and also increasing government expenditure and exchange rate in the country. According to experts like yourself, do you agree with this position?
Well, so it depends on where the person stands. Where I stand today is that we needed to respond to uptick in inflation, and the MPC has responded in what I believe to be the right way by increasing by 100 basis points. What you read to me, if I heard you correctly, sounds like a policy that is required to spend out of inflation. Sorry, not out of inflation, out of a recession. If you were in a recession, you will say, okay, let government spend and spend us out of a recession. We're not in a recession. What we have is galloping inflation. We've gone from about 15.6% to 18.6% between January and now. We've gone from 17.71% in May to 180 basis points increase just in 1 month. The NMPC, I saw a report that says the price of fuel has been increased. So, of course, that is going to be priced into this month's inflation. You still have fuel scarcity ravaging some parts of the nation. That plugs into inflation. Food prices are still soaring. That plugs into inflation. There is no way the MPC can sit down, fold their hands, and not respond to that. And what they have done is to respond. The question should be, have they responded enough? Have we increased rates enough? Remember that the monetary policy rate was left in the same place by the MPC for a very long period. It didn't move. It was 11.5% for the longest period because there was no need to move it at that point. But now you have galloping inflation. You just have to respond to it. And to respond to it, what you do is to use the tools that are available to you. For the MPC, one of the major tools available to them is today the monetary policy rates, and they have responded. We are hopeful that the rate of increase of inflation month on month will begin to reduce, because if you check between what happened last month and what happened in May and then in June, you will see that the rate of increase of inflation is actually on the uptick. So that's what CBN is trying to do, or the MPC is trying to do, to stem that tide. And what they've done, again, is the right thing to do. We only wait to see the report because, as I said earlier on, inflation is a lagging indicator and not a forward-looking indicator.
My concern is, the responding, the reactionary move, instead of coming up with far-reaching policies that can actually, give you predictable outcomes. And there seems to be some kind of disconnect between theory and practice. Raise interest rates and inflation will fall. That doesn't seem to be the case in the case of Nigeria.
Not necessarily. So, you see, what you need to do is to raise interest rates to reduce the speed of increase in inflation. It's not necessarily about inflation falling. Like I said to you, a few months ago, Ghana had inflation somewhere around 20-21%. Today, they're almost at 30%. Because, again, unlike us, they don't have fuel subsidy. One of the things that has helped to keep inflation in check in Nigeria is fuel subsidy. If you remove the subsidy on fuel today entirely, we'll probably go to inflation rates of well over 25%. So, again, what they have done is to try and stem the tide. Will we see the results immediately? No. But remember that MPC will meet every month. So when they meet again, then they have an opportunity to take decisions looking forward. You say it's reactionary, but I caution that with inflation, unfortunately, it's a lagging indicator. You see the report first, and then you take a decision on what to do going forward. And for 18.6, you increase rates by 100 basis points. I think is a step in the right direction. We are hopeful that the rate of increase would reduce. We are hopeful that if there could be a solution to the Russia-Ukraine war, we will see a reduction in increase in food commodities, especially wheat and the things we import from Ukraine and Russia. We are hopeful that if we begin to see deceleration of conflicts across the food belt of the nation, so that people can go to their farms and farm and harvest and even sell what they've harvested, you will begin to see reduction in food inflation. So when all these things begin to happen, then you will see reduction. But like I said, the monetary policy rate is not enough in itself. It's a mixed bag of loads of things we need to do. And that's why, again, I recommend to the government that on the monetary policy side, we are seeing movement. On the fiscal side, we need to see movement, and we need to see that handshake to make it work.
Yeah, but not just movement for movement's sake. Let's talk about this subsidy. You just mentioned subsidy. Okay, I'm told we have to wrap it. Thank you very much, Sam Chidoka is an economist joining us on the Arise interview. Thank you very much. Well, that's it for this edition of the Arise interview. Do join us again tomorrow. From me, Ngozi Alebu, and the entire team here in Abuja. Goodbye and thanks for watching.